So guys, I did a video some time ago, about a year ago, on what is the best asset to invest in when it comes to UK buy-to-let property versus the stock market. This is an update in 2022. The economy, those asset classes have changed a lot in terms of their return and the states of the market since then. So this is an update video on what you should invest in when it comes to buy-to-let property versus stocks and shares. What's up guys, welcome back to the channel. My name is Warren. I am a banker here in London and a property investor across the UK. My goal is to live free and independently from property. So I'm looking for an income of £3,000 per month from property in the next 5 years. If that's what you want as well, if you're looking to live free and independently, subscribe. That is what my content is all about. So as I said in the intro guys, this is an update on that previous video. I got some comments, valid comments about including various factors that affect the total return from these assets, such as including stuff like running costs, mortgage interest costs, agent fees. And one of the big fundamental changes guys is comparing the global stock market instead of the UK stock market, because we live in an age and time now where the economy is interconnected globally, especially when it comes to the stock market. People aren't just invested in UK stocks and shares here in the UK. We're invested in global companies, your Facebooks, your Amazons, your Googles, especially with the advent of ETFs and index funds. So let's get straight into this guys. When it comes to investing in property in the UK, in the UK property market, if you want to get a buy to let, it's going to cost you, I'd say, £35,000 minimum to get a buy to let in an affordable part of the UK, all in. Now, I myself invest up north and I aim for properties at around about the 100 to 120k mark. And when we're talking about all the costs such as stamp duty, legal fees, broker costs, and of course the deposit, round about £35,000 minimum to get started in the UK. And what we're going to do guys in this video is compare investing that £35,000 in a property versus in global stocks, in the global stock market via an ETF. And I'll explain what an ETF is further down the line. So let's get straight into the average returns for UK buy-to-lets in the UK housing market. Now, the average UK housing price growth over the last 5 years has been 6% per year. That's 30% altogether from 2017 until now. That is the capital growth, the rise in the price, the rise in the value of a UK property that has been gained on average, guys, in the UK housing market. So if you're investing in a property for 110k, 6% per year, you're looking at growth in terms of capital appreciation of £6,600 per year. That's the average when we're talking about properties in the UK housing market at that price point. And of course, guys, when you invest in UK buy-to-let properties, you're not just benefiting from the capital appreciation, you're also renting it out to tenants. So you're also getting a return from rental income throughout the life of that asset. Now, as I mentioned at the beginning of this video, the average UK house price up north for a buy-to-let, I invest in Liverpool, Sheffield. I'm also a fan of Nottingham, Leeds. For a one bed, you can safely get a one bed in these areas for £110,000. And across that northwest region where property is really booming right now, your gross rent's going to be round about £750 for a good condition one bed property. But of course, that's not the amount that you take home in your pocket every month. We need to subtract from that 5% maintenance costs. That's a cost of things like repairs, etc., etc. We're also going to subtract the mortgage interest. Now, we're doing it at the current rates in 2022. A buy to let, you're talking about round about 5% in this current market. That's £458 to subtract. And we're also going to subtract agent fees. I'm going to assume that we're using an agent to manage the property, round about 10%, so that's £75 off. So that leaves a net amount that you take home of £163 per month. That's £2,000 per annum. So your total annual return, guys, from a UK buy-to-let, including capital appreciation and your net rent, is going to be that £6,600 increase in the value of your property, as well as your £2,000 annual rent. Altogether, that's £8,600. You've invested £35,000 all in. So as a percentage of that amount, you're getting a return of 24.5% per annum for that UK average buy-to-let. That's average, guys. Yes, it will vary up and down the UK, but an average across all the homes in the UK, that's round about what you can expect in terms of total return from UK property from a UK buy-to-let. Now, let's do the same thing for the global stock market, and we're assuming here that you're investing in a fund. Now, I've taken the Vanguard Global Index Fund. I invest in that myself. I'm a fan of index funds, especially especially global ones, because you get exposure, huge amounts of diversification, and exposure to companies all across the world, not just the USA and the UK, globally, guys. And the Vanguard Global Index Fund is very popular. And as you can see here, guys, 7,180 stocks. I'm not marketing this, by the way. Vanguard aren't paying me. It's just a fund that I'm a fan of. 7,000 or over 7,000 stocks that you're investing in globally. Huge diversification, as I said. And that is a key selling point, in fact, when it comes to investing via ETFs, is that global exposure and diversification, which is key when it comes to investing in any asset class, by the way. And as you can see on screen, so if you invested £10,000 in this global index fund, that will be worth £15,305 today. That is a 54% increase over 5 years, which is 10.6% per annum. This is also an accumulation fund. I invest in accumulation funds, which basically means that when you get paid dividends, they get reinvested to buy more shares. You don't take that out as cash and then use it for other stuff. You reinvest it and buy more shares and more shares over time. And this really compounds your returns over time. Today's video is brought to you by InvestEngine. Guys, I love property. That is my main focus, what I like to do, but I don't just focus on property. I like to diversify my investments outside of that to spread my risk. And I also invest in the stock market. The property and the stock market are 2 out of the 4 biggest sources of wealth in the UK. And that I personally use to invest in the stock market in index funds is called InvestEngine. Reason why I love InvestEngine is because you can create an account and start investing in a few minutes from your phone. There's no fees involved, and your money is protected by the Financial Services Compensation Scheme up to £85,000. This app makes it simple and accessible to invest in the stock market, especially if you're a novice. I personally have a direct debit each month and it goes straight into a global index fund every month. I don't even have to think about it. It's all automated and it does it for me. And guys, if you sign up and invest at least £100 with InvestEngine, you get a £25 bonus if you go through the link in the description below. So guys, sign up today and diversify your investments. And now back to the video. And now, as you can see on screen, dividends are showing as 1.35% per year. Now, obviously, this changes because there are over 7,000 companies in this fund. Some of them will pay dividends during the year, some won't. So this number fluctuates up and down, but let's just take this as read. And then what you want to do is subtract from these returns the ongoing charge of 0.23% per annum. So in summary, the total return is a 10.6% growth in the value of these global stocks per annum, plus the dividends, which is 1.35%. And then you subtract from that the 0.23% ongoing charge. It gives you a net total return of this Vanguard Global Index Fund of 11.72% per annum. So in pure numbers terms, guys, if you're investing this £35,000 in property today, it will be worth 43.5% after 1 year. That's at 24.5% total annual return that we looked at earlier on from UK buy to let. Then take that and invest it in the global stock market in this global index fund instead. After 1 year, it's going to be worth £39,000. So guys, the clear winner is property. Both of those returns are really good, by the way. I'd be more than happy with either of those per annum, but obviously one is greater than the other, and that is UK property, UK buy to let. And as I said, guys, of course, these are averages across the UK, especially for the total returns from UK housing, UK buy to let property. And of course, past performance does not guarantee future returns. But when we're talking about analysis and predictions, a lot of that is going to be based on past performances, guys. And also, one is not necessarily better than the other. I do both. I don't place UK property, UK buy to let over the stock market. I invest in both. Why? Because of diversification. I have my investments spread over multiple asset classes and types of assets. So guys, that was the updated version of this video when it comes to investing in UK buy to let versus the stock market. Guys, which are you going for? Are you doing one? Are you a property person? Are you a stock market person? Are you both? What do you think of those returns? Were you surprised in the difference between the returns of UK buy buy-to-let versus the stock market. Really interested to hear your opinions. Let me know in the comment section below. Guys, check out my property dashboard that I use to assess my investments when it comes to property and what I should and shouldn't invest in. And guys, of course, subscribe, like for the algorithm, and I'll see you guys soon.